coming today. Really appreciate. I never take your time for granted, and even if there would be only like 10 people watching this stream, then I would still host the webcast regardless of the number of people. So yeah, once again, thanks a lot for coming. Really appreciate. My name is Dimitri. I'm the portfolio manager and basically can answer to all of your questions related to the automated trading at bitsgap, smart trading mode at bitsgap, and techniques related to the risk management and profit maximization tools that we've developed here at bitsgap. So yeah, just let me know if you can hear my voice good enough. Just type 1 in the chat box if everything is perfectly tuned. Yeah, thanks Peter, thanks. Yeah, by the way, Peter, I will answer to your question with regards to the sideways action strategy. So that's something that we will discuss today. So yeah, today's agenda is basically how to construct different strategies depending on your risk appetite and how much you actually want to earn from the market, because you know that the greater the risk you take, the higher is the profit potential in that case. And of course, if you take lower risk, then the reward is in that case also lower. So we need to really find the trade-off, and that's something that we will discuss, how to build optimal strategies depending on the market scenario with bitsgap automated bots. So we will discuss today the classic bot, yeah, the SBot, and the brand new bot we launched like 3 weeks ago, I think. Yeah, the combo bot. So that's the one designed for the futures market trading. It's a completely different story, different configuration, different level of risk. So that's something that I believe many of you are experimenting with. Yeah, because it really requires you to have knowledge about the leveraged trading and what are the risks that you inherit when you trade futures market in comparison with the spot market. So that's something that we will discuss. So I don't want to talk about this agenda furthermore. Let's just go straight to the platform and we will start off the spot market bots. So as I log in, this is my interface, like one of my account right now. That's actually the main account that I have here. So as I go to bots, notice that I already have one bot trading. Let me just close the window because that's noise outside of the street. Yeah, so let's continue. The thing is that there are two modes, like already mentioned, the spot market trading, and here we have two bots. That's the SBot and the classic bot. So right now on my spot account on Binance, I have Tron trading to USDT. Okay, so in 3 days I made on average 1.34% daily, which is a pretty decent return per day. I mean, you get more than 30% monthly if this sustains. Yeah, so far so good. $16 to my 400 total investment. So as I mentioned that we have the SBot and the classic bot, it's really important to understand what makes them different, okay, and how to construct optimal portfolios. So let's start with the original one. That's the one that was the first one to be launched on the bitsgap. That's the classic bot. So let's go back a bit. So the classic bot is the one that traders and portfolio managers should stick with if you anticipate the price of the coin to go higher, like this, for example. You see, if you would have launched the bot, let's say over here, right before this insane rally, yeah, then the classic bot would bring you more returns than if you would launch the SBot on this same cryptocurrency. That's because of the investment distribution logic implemented in the classic bot. and it's different in the SBot in that case. So the thing about the classic bot, so once again, classic bot is optimal for the rising market. If you anticipate the market to move like this, then stick with the classic bot. Because the thing about the classic bot, due to its investment distribution logic, as the price goes higher, on these short-term falls, it accumulates, it increases exposure to the base currency more than in case of the SBot. Because the logic of the classic bot is to buy and sell always the same number of coins, regardless of the price. So it will buy 10 coins if it costs $100, and it will still buy 10 coins, you see here, at the higher price, at the price level where it's now more expensive. So it can be that 10 coins, in order to buy these 10 coins, the classic bot now needs to spend like $150. So following this logic, you can clearly see that on these short-term falls on a rally, it accumulates, the investment exposure is rising. You see, 10 coins, now 150. At this price level, it would be maybe like 200 to be spent in order to buy it, okay? Because we know that in bitsgap automated trading, the board buys low and sells high. So that's why on these short-term fall opportunities, it is able to execute some buy orders. So that's why it always increases your market exposure on these short-term falls, which is good because eventually the price is going higher, and since your investment it increases proportionately, then in that case you generate more returns. All right, whereas in case of the, let me just remove all the drawings, but in case of the SBot, like imagine you've launched the bot, the SBot strategy on this rising market, okay? So, and here you have these short-term falls. The thing about the SBot is that on this short-term falls, it spends the same investment value. So in classic bot, we know that it buys like 10 coins, but in case of the SBot, it focuses on the investment. So it makes sure that it always spends the same investment. Like for example, here it buys coins using $100, and here as well it will spend $100 to buy coins, and here as well. But the thing is that as the price is rising, that means that the value of one coin increases. So if at this level, at $400 you could buy, let's say, 10 coins, yeah, now as the price is more expensive, having only $100, you can buy, let's say, only 8 coins. You see, in that case, this is where the SBot loses, like relative to the classic bot, because as the market goes higher, the risk exposure increase remains pretty stagnant, like the same. So it just spends $100. So eventually you end up having a lower return in the SBot compared with the classic bot that would bring you more returns on this same market scenario, okay? So that's the thing what makes SBot different from the classic bot. So that's why we launched the classic bot, and I think I even have this sample. Yeah, so here we go. You see, I launched the bot, that was the SBot. Same period, 4 days, on XRP trading to USDT. And by the way, I got this data from the backtest tool that I have here, the one that you can guys use to backtest any strategy to see what would be the return if you would have launched the bot, let's say a week ago, 2 weeks ago, maybe a month ago. So that's something, guys, for you to always consider, because no need to rush. Just make sure that the configuration that you set is sound, it's credible, and for you it works the best, okay? And so here, using the backtest mode, I could instantly find out that launching SBot from the 20th of November until the 24th of November, it would bring me 53% of the return. Whereas if I would have launched the classic bot on this same period, you see, 20th of November until the 24th of November, absolutely the same period. But the thing is that the classic bot would bring me 70% of the return. So here's the perfect visualization of how the classic bot outperforms the SBot on the rising market. So I hope, guys, this fully answers to your question when you should stick with the classic bot and when you should stick with the SBot. So we use the classic bot when we anticipate the market to move like here in this example on XRP, and we stick with the SBot on the sideways market. So yeah, Peter, answering to your question with regards to the sideways market formation, SBot is the one that you stick with, and let me just show you why. So think about the sideways market. By the way, sideways market is when the price moves like this. And actually, let me show you some real case scenarios. You see, we have four primary market phases. We have the accumulation phase. That's something that you can see before the rally. This is where buyers and sellers are fighting for the price equilibrium, and basically this is when buyers kind of accumulate the position, and as soon as sellers lose the power, they can no longer withstand the pressure from the buyers. Then you see the breakout of the resistance, and the price now goes higher. It establishes new higher highs. So accumulation is a perfect phase for this for the SBot, because that's basically the sideways market. In the advancing mode, that's something that I already explained. This is when we need to stick with the classic bot, as it brings us more returns on the rising market. And distribution, that's something that you see right after the advancing, because in the distribution, basically those who made decent returns on this rally, they now lock in this return. So by locking in the returns, they need to sell it, right? So this puts selling pressure on the market, and that's why you see this stagnant period. This is where again sellers and buyers are fighting for the equilibrium price. So that's why, as you spot the distribution right after the advancing mode, this is where you can utilize the SBot, because we know that on the sideways market, SBot is the ultimate solution. Okay, so here we go, the SBot, classic bot. And the combo long, that's the one related to the combo bot for the futures market. Only with the combo bot you can generate returns on the downfall. That's something that you cannot do with the SBot and the classic bot on the spot market. It's only an option for the combo bot to generate your returns on the downside market. Okay, so let's go back to the platform and see what we can do. So let's say, yeah, the classic bot, the first one that I explained, and let's say I want, I anticipate the price to continue the rally. Let's say, you see I have hour trading to USDT. Okay, let's assume that I think the price will move like this. Okay, so that's why I will stick with the classic bot. So maybe I will put my lower price here. So the first step for you to do, guys, is to define the trading range and look at the key price levels. So the previous highest high was here at the price of 578. So that's something that at least I anticipate the price to move to, okay, before it breaches this level and goes even higher. So that's my first target, and that's why I'm pretty satisfied with this current configuration, where I have my upper price aligned with the closest, like the closest key resistance price level. So this is the configuration you can stick with. Now the next thing for you to define is the amount of grid levels that you want to have in this trading range, because the more grid levels you put, the larger investment is required, because each grid level requires a certain minimum investment. And on Binance, for example, for the vast majority of cryptocurrencies, the minimum trade size, the minimum trade size for the limit order is $10. So that's why the more grid levels you have, the larger your investment should be. But we made it possible for you to quickly adjust the configuration. Let's say you wanted to allocate only 300 USDT in this configuration with 89 grid levels. It turns out that this number is not enough. It's not just sufficient. So you can either increase it, and in order to have 89 grid levels, you need to have the minimum of $990. So you can fix it. I mean, you can increase the investment allocation, but if you don't want this to do, then you just need to adjust the amount of grid levels. So with only 27 grid levels, you can afford investing in this configuration where you have only 300 USDT. And by doing so, your grid step is going to be 1.23%. So that's basically the distance between your limit buy and limit sell order. So that's the margin profit that you take from the market for each successful trade execution. And by successful trade execution, I mean the combination of buying low. So at first we have to see the bot executing the limit buy order, right? And then what it purchased at this limit buy order needs to be sold later. So that's why only after we sell this, what we purchased, that is when we have a successful trade execution. Buy and then you sell it. So it's exactly 1.23%. And by the way, all fees are already taken into account. So that means that the profit you see, like in my case of Tron, is net of all fees, closed orders. You see fee for each execution, because for each buy and sell order we need to pay the fee, and it's taken into account. So the profit you see here is net of all fees. So that's your pure profit. It's something that you already possess. It's something that is already on your balance and you can use it. So that's the cool thing about bitsgap, is that we actually take the fee into account so that the data you receive here, like the visualized one, is transparent, and you don't have to go to Binance or where you're trading, like maybe OKEx, maybe Huobi, to check whether or not this profit is legit and it really is the actual return that you generated, which is, by the way, the case for some other platforms that do not actually calculate the fee, and the return they display as a final one is actually exaggerated. It's not the real one. It can be like by like 15%. I mean, yeah, somewhat around this value, more than actually you earn, because it doesn't take into account the fees that you paid. So yeah, let's go back to the demo mode. By the way, in the demo mode you have virtual money to trade with. It's a cool feature because here you're using the virtual money. Basically that's the market simulator mode, free risk. So as soon as you gain enough experience, you can then start trading your real money. So the demo mode is a cool feature for you to experiment and to develop your strategy memorandum and yeah, basically trading tips and tricks before risking your real money. So that's something that we have at bitsgap for you guys to offer. So yeah, let's go back to the initial configuration, like this one, 300 investment, I think. Yeah, that's one we had. Adjust. Yeah. So for me, this grid step is good enough. It's a decent value. I usually trade from 0.67, the last one I traded, up to around 1.5. No, actually not 0.5. It's around 1.2%. That's my grid range, like grid step range. I'm comfortable with. It has proven to be successful for me. And that's why I stick with this configuration where I have my grid step from 0.67 up to 1.2%. I mean, it's just from my practical experience. It has proven to be successful. And this kind of range allows me to achieve around 30% monthly. Like the last one trade I closed was BNB trading to USDT. And I think I had like 0.8% as a grid step or something, and I managed to make 30% in bot profit for the period of 1 month. That's a very impressive return just for 1 month, and that's why in other past cases that I had, when I stick with the same grid step range, I made like around 30%, sometimes even more. So that's something that has proven for me to be valid, successful, and that's why I stick with this exact grid step range. Okay, it can be different for you because coins are like different from each other. Some are more volatile, some are moderately volatile, some are like low volatility coins. It's just that you need to figure out what is the list of your favorite coins, to say the volatility of each in this list of your favorite coins, to check if this grid step that you stick with is perfectly in line with the market volatility of your favorite coins, and that it can bring you decent returns. Okay, so for me, since I'm trading coins like BNB, 0x, what else I'm trading? Link, Quantum, Bitcoin, Ethereum. For me, the trading range, the grid step range from 0.67% to 1.2%, that's the one over here, has proven to be successful. Yeah, so that's something that you can try as well, or feel free to come up with your own grid step range and share the results with the rest of us. And yeah, that's the cool thing, that we have the Telegram community and the support here in bitsgap, where you can guys really provide your feedback, exchange your thoughts, exchange your ideas, so that the rest could see, and eventually this mantra of experience sharing is eventually good for everyone. It's a win-win strategy, because the more you share, the more you see, the more you analyze, the higher are the chances, and the quicker you will come up with the decent and valid strategy for you. So that's why don't hesitate to exchange your thoughts, your bots. By the way, you can do this by just clicking here, share and earn. You can actually share the exact configuration that you currently have with the rest of us. And by the way, it's a referral link at the same time, which is another tip for you guys. You can not only share your results, but you can also bring your peers to the platform. So anyway, that's a cool feature. So that's the thing about the classic bot. And as we speak of the SBot, and let's actually switch back to the demo mode. Yeah, and let's see what we have for the SBot. So you now know that the SBot is the perfect one for the sideways market. And by the way, the strategy that you can use on the sideways market is this one, for example. So that's, by the way, is the pattern formation that you can spot on any coin in crypto. Yeah, so this pattern formation basically tells you that it's a perfect trading range to execute the SBot, because that's the exact sideways formation we are looking for. So the configuration that you can stick with is this one. Yeah, because as you spot this pattern formation, you anticipate the price to bounce off the support line and then rise back to the resistance, and maybe again it will revert and will fall down to the support, bounces off the support again, and then rises to resistance, and hopefully, like fortunately, it will even breach the resistance and will go even higher. So that's something that we are looking for. So that's why that's the configuration you can stick with on this sideways market, launching the SBot. And another cool thing about this pattern formation is that your stop loss is relatively close to the entry price, which is another vital thing to take into account when it comes to trading, because we really need to focus on the risk management at first place, because risk management defines our success. You can have 3 trades in profit in a row that will cover next 7 losses that you can have in a row. So risk management is the first priority. Just make sure that the potential return is like it exceeds the potential risk. And I will, by the way, show you how you can calculate that in the smart trading mode. So as we speak of this, continue speaking about this pattern, your stop loss is here below the support line, because once the price, unfortunately, it can be that this market no longer wants to go higher, or at least to stay within this trading range, and now sellers want to push lower. Then when you see the price breaching the support line and trading below this level, well, in my case, I look for like 2 days and 3 days for the price to stay below the support before I actually close the position. But just for like to make it simple, you put your stop loss below the support line. This is where if the price reaches this price level of your stop loss, most likely it will continue the downfall. So that's why you put your stop loss here, and it's pretty close to your entry price. Okay, so that's the configuration you can stick with when you spot this kind of pattern on the market. Of course, there are many other patterns that exist, like for example this one. That's the perfect one for the classic bot, because you see the support line in that case is angled up, and same with the resistance, it's an angled up resistance line. That's something that you can spot on a rising market, and it successfully bounces off the angled up support line and then reverts from the resistance. So once, I mean, I urge you to trade this pattern only if you see the bounce off. Do not enter the market when you just see the price reaching the support, because it's not enough. It reached the support, but it can break it. At least wait for some time to see the bounce of it, so that it brings you more clarity and more confidence that most likely, like statistically, it will go higher and will establish new higher high right at the next resistance top. So here you can stick with this pattern, configuration. Also notice that the stop loss is going to be pretty close to your entry price, so that's something you should consider as well. By the way, never forget about the stop loss. So this is the configuration you can use once you spot this pattern formation, which is pretty typical for the rising market. And we know that for the rising market, we stick with the classic bot. Okay, so here it is. Yeah, so the next thing I wanted to discuss is basically how to build high yield and low risk strategies. I hope I have it. No, I actually don't have it. Let's see if I... No, okay, maybe not this time. But anyway, what I wanted to show you is a high yield strategy, like the highest possible return that you can make. So we know that in order to maximize our returns, we need to trade on those coins that potentially are gonna move higher. So that's why classic bot is the one we stick with. The next thing to do is to find the coin. I mean, that's the first actually thing to do, is to find the coin that is actually trading to Bitcoin, for example. Because, for example, 0x to Bitcoin, let's see what we have there. So by trading on 0x to Bitcoin, you have a double risk exposure, because the value of 0x fluctuates relative to Bitcoin. That's your number one risk exposure. And the number two risk exposure is that as the bot generates returns in the quote currency, in that case that's Bitcoin, then you know that the value of Bitcoin also fluctuates relative to USDT, for example. So in that case, we end up having a double risk exposure by trading 0x to Bitcoin, which is not the case when you trade, let's say, 0x to USDT. In that case, your risk exposure is only in 0x, its value as it fluctuates, because you know that as you make returns in the quote currency, in that case that's USDT, you know that the value of USDT that the bot made for you today, it will be the same tomorrow, because USDT is pegged to dollar and it's 1-to-1. So it's going to be $1 tomorrow, it's going to be $1 the day after tomorrow. Of course, there are some underlying risks with regards to the stable coins in the industry, but these risks are pretty justified and relatively insignificant. So that's why, like, the time has proven that in most cases, like 98% cases, USDT is exactly $1, okay? But as we go back to 0x to Bitcoin, here you have a double exposure. And as you have this double exposure by trading the classic bot here, you not only generate, your investments, your return on investments is the 0x value plus it's the BTC that you made in this trade, which can also rise to USDT. So in that case, if both 0x appreciates relative to BTC, and also the value of BTC appreciates to USDT, and that's something that you can check on TradingView, by the way. So let's switch 0x BTC. Where is that? 0x. Oh, come on, BTC. Yes, here we go. Let's close this one. And now let's actually get rid of the volume as well. And let's switch to compare mode. So as we generate returns in Bitcoin, we are interested in the value of Bitcoin as well. So let's use BTC USDT from Binance. So look at that. The thing here is that as the price of 0x relative to Bitcoin rises, you can notice that the value of Bitcoin relative to USDT also rises. So the bot made your returns in BTC on this rally here. And at the same time, this Bitcoin that you made in this bot trade also has appreciated during this period of time. So that means that now what the bot made for you is also multiplied by the exchange rate to Bitcoin USDT. So the value of your Bitcoin relative to USDT has also appreciated. Since, like, for me the benchmark is USDT, like the return you made in USDT, for me that's the only sound metric to take into account. I only evaluate my success in the USDT, because by the end of the day you realize that USD is the currency that works for all of us. You can use it to buy goods, you can use it to buy properties and all that stuff. And as it takes for Bitcoin time to adapt, to enter all the markets globally and provide us with different branches where we can use Bitcoin, because for example in the USA you can use Bitcoin to buy Lambo, and there are cases where you can buy the real estate, which is not the case for many other countries. So that's why the utility of Bitcoin is valid just mostly in the blockchain industry, whereas USDT is something that we can use to withdraw from the market in USD and use this USD in daily life. So that's why in this strategy, as you have this double risk exposure, and thanks to this rally on both the 0x to Bitcoin and also the value of Bitcoin to USDT appreciated, you have this double X return, if not more. And that's why this is known as the high yield strategy, because you made substantially bigger returns in USDT. Okay, but as you trade this coin, you also have to take into account that, for example, if you were unfortunate enough to launch the bot, let's say over here, right before it started to fall, then on this downfall, I mean, you would still make returns in Bitcoin, because we know that the bot makes returns regardless of the market trend, because it always can find this micro buy and micro sell opportunities. As you see, it swings, so that's why it can still generate returns in Bitcoin. But the thing is that we made return in Bitcoin, but unfortunately the value of 0x has depreciated, and also you see during this period the value of Bitcoin relative to USDT has depreciated. So in that case we had a double X risk exposure, which is something we don't want to have. But that is something that we need to take into account when trading these high yield strategies, is that in order to make 2x, you take 2x of the risk as well. I hope you didn't get lost in this my artwork. Yeah, there's some Picasso art over here on the trading view, but still I hope you guys really understand what I'm trying to tell you, is that in order to make more you need to take larger risks. So that's the case for the automated trading on cryptocurrency pairs that are volatile both. So that's the case for 0x to Bitcoin, for example. In that case, if you want to have a conservative risk, so you don't want to take this double X exposure, then you can just trade coins that are rated to USDT or any other stable coin. For example, you can trade BNB to BUSD, because here you know that you make returns in like the bot makes you profit in BUSD, which is the stable coin, and you know that tomorrow it's going to be $1, the day after tomorrow it's going to be also $1. So that's for you the conservative risk. Yeah, the built-in risk management advantage of bitsgap automated bots is that you never enter the market by 100%, because you see you have this in this configuration you have these buy limit orders and limit sell orders. So the more limit sell orders you plot as you configure the bot, that means that you now need to buy enough of the base currency. As you look at it visually, you can say that we have around 60% of limit sell orders, right? Because this range is wider. And here we have around 40% of buy orders. That exactly, like this 60% is your initial risk exposure, because in order to launch this bot at the start, you already need to have 60% of the base currency, that's 0x in that case, in order to have all these limit sell orders placed by the bot. Because otherwise you cannot place a limit sell order if you have nothing to sell, right? So that's why in order to plot them, you need to have enough of the base currency at the start. And here it's exactly 60%. So that's the cool thing about automation, is that you are not entering the market with 100 risk exposure. So in this case, you enter with a 60% of your exposure out of your total investment. That's exactly 969 zero axis, your initial risk exposure. So that's the cool thing. That's an inherent risk management in automated bots. And if the price, unfortunately, if it falls here, then you increase your risk exposure gradually, because you have these multiple buy orders. So that means that if the price falls and then hopefully it reverts, then first of all, as the price falls, you increase your risk exposure, and that means that your entry price changes. It always, in that case, is flexible. So you end up having your entry price, like average entry price, around this price level. Eventually, as the price then reverts, hopefully, already at somewhere around this area, your break-even has occurred and you are now in the profit. So it's really the cool thing about automation, is that at the bounce off, you can quickly offset the negative impact that you had before on this short-term fall. So the way the bot distributes your investment proportionately is already a built-in risk management mechanism. You never enter the market with 100% of your investment. It's proportionately distributed, and that's the cool thing about automation. Let me just show you the case. Yeah, here's the one I always use to show you guys. That's the case, like on the chart that you see, that's what you would have if you just bought Quantum in that case. So from that price point where you purchased it, and if you would hodl it until that point, you would be in minus 6.88%. But thanks to the bot, which managed to generate returns even on this downfall, this profit generated by the bot offsets the negative impact overall. And that's why you only end up having a minus 3.18% of the investment change, compared with what you would have if you would just buy Quantum in a hodl mode, and you would have here minus 6.88%. So in that case, that's the exact visualization of the underlying risk management that you have as you launch the bot, is that due to this proportionate investment distribution and plus the fact that bot can trade and generate your returns even on the downfall, the profit you made and this cost averaging effect of proportionately buying the crypto, you end up having you lost twice less than you would have in the hodl strategy. So that's the thing about automation, is that it substantially minimizes the risk if you were unfortunate enough and the price of your coin falls. Okay, so that's another cool feature. In order to protect with your investment, this risk management that is built in the bot it can be not enough, and that's why in order to limit the loss, you have this stop loss. Yeah, so that's exactly what I have here for you in these patterns where you see this stop loss. I always plot it so that I have a limited loss just in case I was wrong, because the thing about trading is that you cannot be always right. At some point you will make mistakes, but make sure that as you make this, it's not basically mistakes, but just that the market went in the wrong direction, because there are many things that can affect the market. Like, for example, Elon Musk suddenly tweets something about Dogecoin, something bad about Dogecoin, and it falls, because we know that people, like the crowd, is so influenced by the influencers that can just bullshit something, and this can drive the market crazy. This is something that you cannot anticipate, even if you made a sound technical and fundamental research. So that's why always protect your positions, always put this stop loss, always. That's I highly urge you to do this, because this really limits the loss that you can have in this trade. Okay, once again, risk management is your first priority always. I tend to plot this stop loss since I'm in most cases trading based on the support and resistance lines, and also I take into account the market sentiment on the market. So for example, right now I see that 0x to Bitcoin is trading above this point of interest line. Yeah, this price level is where the most volume was traded by both sellers and buyers. So as I see the price now trading above this line, above this point of interest, that means that more or less the market sentiment is now bullish. So this brings me more clarity and more confidence that the bullish momentum will sustain as far as the price stays above this point of interest. Okay, so there are different techniques that you can use to rationalize your trading strategies. Yeah, so for me, I use the volume profile, resistance and support lines. Yeah, and as they are telling me that the market sentiment is bullish, then I stick with I just launched the bot, and I always make sure that my stop loss is below the key support line in that case. So that if this strategy, if the price falls, then at least I have a minimized loss in that case. I have a limited loss in that case. So never forget about the stop loss. The thing about the trading up and the ultimate configuration, the ultimate high yield strategy, is then you have, first of all, you think the price will go like this, rally. You select the classic bot. So first thing is classic bot. No, actually the first thing was the rally. Okay, let's put it here. You anticipate the rally. And the third thing is eventually the stop loss. And the fourth thing is the trailing up. Trailing. Yeah. I hope you can see this. So the thing about the trailing is that if the price breaks the upper of our trading range right over here, then thanks to the trading up, the bot will continue trading even if the price goes above of the initial upper price. Because in that case, with the trailing up enabled, your trading range will follow the rally, and you end up having your trading range somewhere in that area. I have the case here as well, just to show you. Here we go. You see, initially I was here where you see all these yellow lines. That was my initial trading range. So you see that's exactly my upper limit price, and below is my lower limit price. The price breached the upper price and eventually moved higher. So thanks to the trading up that I enabled in this configuration, it allowed me to participate in this rally, and that's why my trading range has followed the rally successfully, and now you see where the price is trading at, and my trading range is exactly in this new area. Otherwise you would see something like this. Without trading up enabled, you would just get stuck in this area, and the bot would only continue to trade for you only if the price would fall back to this trading range. So do not forget about the trading up. If you are, let's say, if you are away on holidays, you have no time, or you don't want to spend time on monitoring your bots. By enabling the trading up, you just let the bot to do the job. In case if the price, while you're absent, goes higher, you can be away, you can sleep at that time as the Bitcoin goes higher. It makes 70,000, for example. But you are fortunate enough because the bot made the job for you. It followed this rally. It made decent returns on this price swings during this rally to 70K, and you end up having more returns as if you would have in case of the configuration without the trading up enabled. You would just get you would just skip this rally. That's the thing. So yeah, once again, the ultimate configuration. First of all, you need to see, like, to find those cryptocurrency pairs that you think will go higher, so you anticipate the rally. Secondly, you need to, what was that, I think, yeah, of course, the classic bot, because we know the classic bot is the perfect one for the rising market. The third one is to make sure that you have the stop loss just in case if something goes wrong, and the fourth one is trailing up enabled. That's your ultimate high yield strategy with bitsgap bots. Yeah, and by the way, in order to have this high yield, you need to expect the rally on coins like 0x, for example, to Bitcoin. So where you also think that the value of Bitcoin will appreciate, let's use this one, in USDT at the same time. So that's what you need to figure out, like the cross check. Done. Ultimate high yield strategy in that case. The let's leave it here, and let's make it maybe 28. Okay, so now the conservative strategy would imply that, well, you expect the rally, that's okay, but you are trading cryptocurrency pairs that are trading to stable coins like BTC, USDT, for example. The next one is again the classic bot, as you know that on the rally that's the best one, best one. The third one is to plot the stop loss. The fourth one is again trading up. So that's your ultimate, let's use the caps lock, ultimate conservative yield strategy. Let's make it yellow in that case. So here's the thing to take into account. And by the way, in this ultimate high yield strategy, stop loss is the top priority, because we know that in this high yield strategy, your risk is multiplied because you have a double exposure, both to, in that case, 0x and BTC relative to USDT. That's the thing to keep in mind. So two strategies explained here, and I'm gonna leave it here for you just for a while. So the next thing to consider is, okay, so we covered the classic bot, strategies to achieve this high yield strategy covered, conservative yield also covered, and the sideways market, we also covered the sideways market. So now what is left is actually the combo bot. So this is where most of your experience is required, and that's something is what is not for the beginners. So if you never traded futures contracts before, then be careful with the combo bot, because the risk exposure in this trading mode is larger than on the spot market, where we have the classic and the SBot. So let's switch to the futures market. Actually, let me switch my account just real quick, because I have another one where I have some combo bots trading now. Just a second. Yes, so here we go. Here I have my futures bot now trading for me. That's the combo bot. And the thing is that the only key metric I need to monitor here is the sum profit. That's my overall return. That's the bot profit generated so far on this rally. And that's the open P&L as well. So right now my open P&L is -3, but still I end up having a return of $37. That's because of the bot profit generated on this rally. And if you click here, you will see that. Closed orders, let's see the latest time we had. Here we go. Yeah, so the latest return, like the net profit, was 41. You see? And since we have our P&L -3, exactly 41 -3 is going to be around 37.5. So that's why this sum profit is 37, and that's the only key metric for you guys to monitor. Don't get confused with other metrics. As far as your sum profit is positive, you are doing just great. As you see the sum profit negative, then you are doing bad in that case. So far so good. You see my initial investment was $17. That's my initial margin. It's initial risk exposure. But the thing about the combo bot, because it's completely different from the SBot and the classic bot, is that your risk exposure can be multiplied as a result, because it's due to the investment distribution that we have here. For example, let's see what we have for fuel and USDT. So let's say we want to trade long. I mean, I think the price will move like this. That's why I stick with long. If I would see the price moving like this below, then short strategy is what would bring me returns on this downfall. But as of now, let's say theoretically that I anticipate the price to move like this. That's why I stick with the long strategy. And let's say I want to put only $20. And let's reduce the amount of grid levels, let's say to 20. Is it enough? No, it's not enough. Maybe in that case 14 grid levels. Nah, 43. Okay, so let's increase it to, let's actually make around 10. That's the minimum of levels you can have. So 32 is required, but I'm gonna plot 40 in that case. So this 40 is your initial margin. 50% of this 40, that's exactly 20, is your initial open P&L. So as you start this bot, you buy, like you use $20 to enter the market, and that's exactly 50%. And now another $20, like $20 margin is here in order to plot all of these short sell orders. Because in futures trading, in order to plot both limit buy and short sell orders, you need to have the margin. And that's why here, in order to have these sell orders, you need to plot also 20 USDT as a margin. Also, we have DCA buy orders below in case if the price falls, so it will increase my exposure, it will adjust my entry price the same way it does in the spot market with the SBot and the classic bot. So here we also have $20. But another thing that we enabled is that even below this first layer of DCA orders, we have another one which is invisible, but we have it here. If the price breaks the last, I mean, if it executes the last buy order, which is this one, then if the price falls even further down, then here we have the mechanism will plot new DCA buy orders. So that's why another 20 USDT is what can be spent here. So you see we have 20, 20, 24 times. So that's exactly $80. And I had the case in my futures trading where I lost exactly double time more. So for example, where is that? You see, yeah, RIF trading to USDT. My initial margin, like the same way I put 40 here, I had 41 for RIF. And I was unfortunate and the price moved in the opposite direction and I lost double. I lost $84 in that case. So that's the inherent risk in the combo bot, is that due to the magnitude of trading in futures market and due to the algorithm that we enabled, as of today, that's the algorithm that you have in the combo bot, is that you have 2-layer DCA structure, and that as the price falls, it can increase the risk exposure up to 2 times, and that's why you can see some unfortunate cases where you lose double than you invested. So you see in my case, that's 41 invested and I lost 84 in total. Same here, I invested 30 and I lost 60%. Sorry, $60. So that's the thing about the combo bot, is that stop loss here is very crucial. And since these are my sample trades, in some cases I enter these trades just for the sake of the examples, even though if I would make the fundamental and technical analysis, I doubt that I would enter the market at that time with this configuration. It's just that these are my sample trades, first trades as we launch the combo bot, just to show you some real cases where you can lose more than you invested. Yeah, so this for you. But in general, you see my sum profit as a result is positive. So like taking these all losses and winning trades, I'm still in the profit, which is good. And if I close my current bot, then this $36 will be added. So 29 plus 36 is exactly 66, and that's why I would be in around maybe I think that would be 20% of the total sum value change in percentage if I would close my current bot. So that's the thing. You don't actually need to ask me why we have this kind of 2-layer DCA structure. Is just that this is the current solution from the IT department. That's what has proven to be the ultimate, like the best solution so far for the futures market trading. And maybe in the future we will make some changes. Maybe we will add another strategy like we have in the spot market. So we had the classic bot, the first traditional one, and then we added the SBot. It's most likely that for the futures market, you will see the combo bot and maybe some other bots as well designed for the futures market, but with different algorithms, so that you can choose depending on the risk appetite and current market conditions. Right now, it's just how it is. 2-layer DCA structure, your risk exposure can be doubled, and like in my case, you can lose twice more. But also you can make 2 times more, 3 times more, 4 times more. You see here, 278%, that's what I made, almost 3 times more. Also here, 164%, and now you see already 219% made. Yeah, so my risk here, more or less, as you know that it can be doubled, is around losing $34. I just multiply 17 by 2, so that's at least what I can expect as the maximum loss here, more or less. Like some cases can be different, but in any case, in general, double more, like multiplied by 2, that's the maximum risk exposure. So if you are willing to take the risk like that, then you can stick with this. So as you configure the bot, and let's say you plot 40, you need to keep in mind that you can lose 80 in that case. If you plot 50, then you can lose 100 in that case. Okay, of course you can lose, I mean, you can minimize the risk significantly if you adjust the stop loss. For example, let's click on 1 inch and let's see where I have the stop loss. And by the way, the stop loss in the combo bot is trailing. So that means that as the price goes higher, for example, let's assume that it will be here in like tomorrow, for example, the price is going to be here. In that case, you will see my stop loss around this area. So it would follow the rally. So at some point, this stop loss will save your profits, because maybe what you can see, I mean, initially my stop loss, I think it was somewhere around this area as I started trading, right below the support line. But as the price moved higher, now my stop loss, I put it around this area. And that's why by doing this, I secure the profit that I made so far. And that's exactly $37 as of now. So make sure to adjust the stop loss when relevant. Usually I tend to move it from one support line to another. As the price goes higher, I have new support levels, so I put it below the support line. So that's the option for you guys that you can consider when trading this highly risky market, which is the futures market. And the leverage here is very important, because the 20 here is actually 200, because it's 10x multiplied, because we use the leverage. The larger your leverage is, the higher is the risk, and the higher are the chances that you will be liquidated from the market. Because the more you borrow from the market to have this opportunity to open 10x larger trades, 20x larger trades, you actually need to put enough of the margin to cover as a collateral, and that means that the larger is the leverage, the more margin is required. And if you don't want to be quickly liquidated from the market, if you want to have your liquidation price distant from your entry, then you need to have a substantial amount of margin to cover this trade. Otherwise, by putting only a few dollars as the margin, whereas having a 20x leverage, then your liquidation is going to be very close to your entry price. So you literally give little space for the bot to trade, and most likely you will be liquidated, because it's the volatile market here and it can swing like this and then instantly go back. So that's something you don't want to see, your price, like your bot being liquidated somewhere around this area. So make sure that you fully understand the logic of leverage trading and how to make sure that you have enough of the margin to trade this crypto that you selected. So that's the thing about the combo bot. In the future webcasts, I think I will cover more cases for the futures bot. Yeah. So far, the pro tip, guys, for you is that, first of all, the stop loss is trailing, so no worries as the price goes higher. The stop loss at some point becomes your take profit, as in my case right now, it was initially here, but now I made decent returns on this rally. Stop loss now is higher, and that's thanks to the trading up. And now that stop loss is basically my my trailing take profit, if you may. So that's the thing. And adjust your stop loss whenever you need, whenever you see the price forming new price formations on the market. Like, for example, let's say it goes like this, boom. So new support line formed, so I would put my stop loss below this support line. So that's the pro tip for you guys. In futures bot trading, it really requires you more time to spend, so that, like, in combo bot, I check the activity every day to see whether or not I need to adjust my stop loss. Whereas in case of the spot market, where I have classic and SBot strategies, I know that I have lower risk there, and I only check the bot activity 3 times a week. That's enough for me. But in case of futures trading, literally, since the risks are substantially higher, then here you need to really figure out whether or not the strategy used yesterday is valid today, and maybe there are some changes that you need to make. Okay, so that's the thing for you guys. That's the pro thing. Adjust your stop loss as the price goes higher. And of course, in case if you are trading short, like you make returns on the downfall, here is the same. You see newly resistance line formed, and you in that case set your stop loss above this resistance. New resistance formed, then in this case plot your stop loss over here. It works the other way around in short. Yeah, so in long you put your stop loss below the support, and in short you put your stop loss above the resistance. That's the thing, don't get confused. If you've never traded futures before, don't start with the combo bot. Just go, let's say, on Binance where they have futures trading, and try with at least 1x leverage, just to really learn about the market more, about how it works and how you can make returns on the downfall and on the rising market. Once you educate yourself and get experience, and you watch this webcast to learn more about the combo bot, you will be prepared to trade on your own with the combo bot. So my primary aim here is to provide you with as many useful tips and clues and use cases so that you could quicker educate yourself and come up with decent strategies on this highly volatile market. And I hope I'm really doing well in this case, educating you guys how to trade on the futures market. But yeah, it's really that the combo bot is for those who have experience trading. That's not really for beginners, but I gave you this guideline on how to become experienced enough to start trading the combo bot. So that's, again, the first thing. Try futures trading manually on Binance account. Just open 1x trade, and then watch the webcasts, learn about the tips and clues, and only then start with small investments, start trading the combo bot. That's the pro tip for you, how you can start trading the combo bot if you lack knowledge in futures trading. Okay, everything step by step. Don't get hyped by these big numbers that I have here. It's just the numbers. It could be minus 226%, so don't get really confused. Step by step, patience is what really important in trading, is that once you have enough knowledge and skills and confidence, only then start trading with your real money. As of now, we don't have the demo mode for the combo bot, so that means that you don't have this opportunity to trade risk-free using virtual money on the combo bot, but that's something that we are working on, and most likely we will add this feature. This feature is only enabled on the Binance ordinary account where you have the spot market. That's here the only way you can use the demo mode, but in like soon we will have demo mode in futures bot as well. Yeah, so that's the short-term roadmap I just outlined. More and more features will be added in futures bot, more and more risk management tools will be implemented, and new strategies will emerge eventually, new bots. So that's something, yeah, just be patient, because the thing is, we get your feedback, we listen to what you say, guys, especially me, because I'm always reading the feedback that you leave down below the video in the comment section. I always take into account what you say. Your ideas, there are some brilliant ideas, some are more or less moderate, but in any case we take into account what you ask and what can be implemented, and we make sure that you get the best out of the platform. So basically the aim of bitsgap is to remain the top tier all-in-one platform where you can trade futures manually, like here in this mode, where you can have automated bots on the spot market and futures market as well, and the platform where you can manage your portfolio to see the performance, total ROE, and other features. So we are working on other sub products that we have at bitsgap, so that you get the utmost experience from bitsgap. The all-in-one platform where you can hodl, where you can smart trade manually, where you can automate and build your ultimate strategies to share with the rest of the members of the community, so that together, all efforts combined, we can build something beautiful, and you guys can make each other better every day. Feel free to share your trades, feel free to share your ideas, what you think is missing, what you think should be improved. That's highly important for us, and I literally appreciate every comment that you leave which is relevant to the topic. Yeah, so if you have some questions unanswered, then of course they will be answered later, maybe in the comment section, maybe next webcast, maybe as you ask them in the support channel in the Telegram as well. So there are many ways to get the answer on your question, and I hope I provided you with enough of the insights as of today, and you now have better understanding how to trade the spot market, like when to trade the SBot, the sideways market, when to trade the classic bot, exactly, that's the advancing market phase, and when to trade the combo bot on the long market, like on the rally and on the downfall. So high yield strategy explained, some ready-made configurations that you can use, just grab them, they are here, you can take them. More strategies based on patterns also explained in the blog, so just go to bitsgap blog where you can find, let's go bitsgap, and you can find some other configurations, other related articles to learn more about the spot market. So for example, about the combo bot, that's the recent one that I made, and here you go, you see it's a more in-depth article about the combo bot. Just take your time, read about it. You see all pro tips and clues are quoted here, so that would instantly grab your attention. And yeah, just make sure that you educate yourself, not only by watching webcasts but also by reading the blog that we updating for you on a weekly basis. So yeah, let's see what are the questions that you might have. So what are good values for volatility for a long-term bot? Well, like if you want to trade long-term, then make sure that your trading range is wide enough to capture all these market swings. Let's grab the line or something. Now let's refresh the page at first, and I will show you how to construct long-term configurations. So first of all, the pro tip here is to have a wide trading zone. Maybe this one is enough, and it can be enough for like next 5 months. So it means that the bot can trade within this range, and this range is exactly, let's use the forecast from the very top down. Yeah, so that's 60%. No, actually, let's use another one we have here. The price range. Now, you see, it's actually 147%. So if you feel like the market is gonna move within this trading range of 147 price gap, then stick with this configuration. This is a more or less long-term configuration. If you feel like the price can substantially increase, then you can make your sell side wider in that case. I don't know why it's lagging behind my actions, but yeah, actually it should move this sell part up to here. For some reason it just does not respond, but I mean it's just lagging a bit. Anyway, having wider zone is one solution to have a long-term configuration. Another one is to, let's say, have your lower price like this and upper price like that with a trading up enabled. In this case, remove drawings, you have your trading range capturing 100%, but also with the trading up, if the price, let's say it moves like this and then bam, goes like this, then with the trading up, the configuration of 100% gap will be adjusted, and you will see your trading range over here. So that's going to be a new trading range. This ensures long-term stability. It ensures that the bot will keep trading for you as the price goes higher. So two options. The first one is to have a very wide trading range, and the second one is to have a lower trading range but with the trading up enabled. Of course, you can enable the trading up in the first option where you have a wider trading range. It's really up to you. Yeah, just keep in mind that the wider is your trading range, the more grid levels will be required to plot, and the larger your investment should be to justify this trading range. So that's the thing. Okay, so think about the take profit. I see you have some concerns. That's something that is really I mean, there are both pros and cons why we have something enabled, why not. It's something that we are always changing depending on what is the best thing for you. But with regards to the subscription plans and all of that, it's something that we don't really discuss on this webcast. Yeah, because again, there are many internal things that we discuss in a team. What should be changed, what should be opted. It just how it is as of today. What you get from your subscription is like the best experience that we think is justified today. Maybe it will be changed. I mean, that's a part of the process. That's the part of the roadmap, that you always make some changes in the subscription plans. You increase something, you decrease something, so that everything stays solid. Okay, so that's why choose the subscription plan that suits you the most. Yeah, but in any case, you have this 14-day trial, and you have this demo mode where you can trade risk-free before you start risking your real money. So all features provided. This is the sandbox for you guys to experiment risk-free before you start trading on real money. So that's it for today. I really appreciate all of you coming today. I always say that I never take your time for granted. I would host this webcast if there would be only 10 people, for example. I would spend the same amount of efforts as I did today, regardless of how many of you are coming. It's just that for me, I really want to give you as many insights as possible and to improve your trading experience so that you could maximize your returns and to minimize the loss. And yeah, that's what I'm trying to achieve here. And please feel free to leave your feedback, and yeah, push the like button if you like this webcast, and I hope to improve the quality of next webcast to bring you even more insights. So yeah, once again, thanks a lot, and I really wish you profitable trading. Stay safe, yeah, and yeah, just wish you the best experience from the cryptocurrency market. And I hope to see you next webcast, which is going to be next Thursday. If everything stays fine, next Thursday we will see you again. So thanks, cheers, have a nice day.